let's change direction. Change direction in terms that we've so far discussed very much transversal issues. How is the fintech scene developing altogether with respect to the classical players? What role does the infrastructure play? What would we have to do in Frankfurt to become an even stronger hub? What role does the supervisory agencies play, and the whole regulation play on that? That was transversal. Now we'd like to do a deep dive on various product areas, and that is basically drilling down on the needs of the customer. So what we try to do now is put the focus on the customer, understand what are the needs of the customer, and then discuss these. And we've thought that it still makes sense to do kind of a little structuring in starting with payments, modern forms of payments, and with payments we would include certainly the current account and the wallet topic, all these things. Later on then, after the break, we'll also talk about the lending side, so it's about credits and loans, and we'll also talk about the asset side, so the investment side, so that we've covered that all. And then there's a special topic left, which is on Bitcoins and how to potentially use that in all of those areas, because it can be used in all of those areas. So now let's go to payments. Very short introduction from my side. First question, what do the customers want? And the interesting thing is really how fast attitude with respect to payments changes. We had a first wave, e-payments. They were born by the internet, by the processes in the internet, by a buying process in Amazon or eBay, and then there was a little step of doing the payment. And some companies have understood well how to do that. And that was PayPal, that was Amazon payment, and they grabbed, in the meantime, the half of the internet market. 50% of the market are gone from banks. Now, we just see the second wave coming. The second wave is on mobile payments. If you have learned how to do it in the internet, wouldn't you maybe want to adapt this knowledge and apply it equally to the real world, to go to your branch and buy things there? And then we are with mobile payments and with smartphones, and we'll have this discussion, I think. Will they come? To what extent they will come? A third wave comes already up, which is kind of an overlaying wave, and that is, why do payments take that long? Okay, from PayPal we think it goes instant. Not really, actually, but the information flow is instant. But if we really bring that thinking further, if we say, by the end we want to have it really instant, because a payment should not run for longer than a physical shipment that you get from Amazon, eBay, or whoever, then the question comes up, isn't there a new wave that we could call instant payment? And very far on the horizon, there's maybe also this topic about a fourth wave, which could be built around cryptocurrencies. Bitcoin would be an example, but we may not address that now. We may address that then in the afternoon discussion. So first thing, we want to understand, what do customers want? How do they think? Second thing is, how is that kind of filtered a little bit, again, by regulation and supervision? Because we've had this discussion on payments already a little bit in the last round. Third round of discussion that we will then have here is, what does it mean for the actors that are already on the market or not yet on the market? So will the game change? Will existing actors step down? Will new actors come up? How is that going to develop? That will be kind of our discussion here. We will, however, start with an intro presentation by Wolf Lichtenstein. And before that, however, standing on this side.
Clicker.
Oh, you need a, yes, I may borrow you this one.
That is so kind of you.
But before you start, I think we should still introduce the panel so that you know who are the people who stand here. Then we start with the intro presentation, and then we start with the rounds of discussion. By the way, always feel free to ask questions. So, who is here on the panel? There is Markus Rupprecht. Markus Rupprecht, founder of Traxpay. How does he name himself? Entrepreneur with a broad overview of European and US banking market, focus on payments. So, special focus on payments. He told me when we were sitting briefly together beforehand, and especially in B2B, that is certainly the area where you can contribute a lot. He is founder of various companies, not only Traxpay, but also of Traxpay. managing director of Tenarios, which is an advisory company. From his background, he is a banker. 10 years of Deutsche Bank, you cannot deny it, I think. 10 years of Deutsche Bank. Then software business, GFT and other companies, and then finally with your own companies. So then we have Salvatore Pennino from Google Germany. Salvatore is in Google working as the head of sales banking Germany, as I understand it. And we will investigate maybe not only on banking, but on a few issues as well. A master's degree of the University of Cologne. You said you come from consumer goods. What made you turn to financial services then? More attractive, more interesting maybe, more challenging? That were probably the reasons. And then also going into a real bank. Banco Santander, then with Visa and American Express, then director in Deutsche Bank, and then Google. Second person here. Third person, I continue with Deutsche Bank, Karsten Roesch. Karsten Roesch is still with Deutsche Bank, and I think he's committed to Deutsche Bank. He's a managing director, the chief operating officer of PBC. PBC is a private and business client, not the investment bank, with a global responsibility for the overall support. So everything of that is on your table. Interestingly enough, he started with a bank as an auditor. I mean, audit is probably a good way to understand how a bank ticks because you have to look into all these things that don't work. So he started with an auditor, not only in Germany, also in Hong Kong, in Australia, in Japan, then back to Frankfurt. Why did you go back to Frankfurt then? I mean, these are interesting places.
Shall I answer?
Yes, sure.
That was basically the direction. It was Sydney, then Tokyo. I think it would have been Tokyo, then Sydney. I wouldn't be here.
Okay, okay. So maybe interesting for the startups where you locate yourself. So in 2001, back to Frankfurt, and then from 2005, member of the Group Audit Executive Committee, and now in the function we've described. Then we have Bernd Richter, standing on my right. Bernd Richter is from Capco. Capco may not be well known to each of you. It is a specialist advisor, I would say, very strong in the financial services business in terms of technology management, but also business model management. And for the last 18 years, so for a long time, led various projects in the area of redesigning business system, getting operating models straight, building new operating models, establishing new business system. That's his responsibility. A computer scientist, by the way. So we are not completely bankers here, which is nice. We have a wide spread of things. It seems that this is typical, by the way, for people who are dealing with payments. They come from various areas. I see that all the time again. And then you start even your own software development company. I'm not sure I read that correctly, but you said in your CV, it is with the age of 18 you did that.
That is correct. I started programming when I was 12. With 14, I moved from basic to assembler. With 16, I did first commercial work as a freelancer. With 18, I thought I'd make a business out of it.
Not a bad idea. Finally, we have Wolf Lichtenstein from SAS, standing here very much on the right from my perspective. He's the general manager and the CEO of SAS in the DACH region. We call it German-speaking, so it's Germany, Austria, Switzerland. Also for the Israeli market, which is, of course, a very, very interesting market. Background, didn't study banking, studied psychology and computer science. It's kind of bringing the human touch together with the technology touch. Don't know whether you achieve that when you study these two things, but it's a good approach anyway.
And it was not planned.
And then various management positions with different companies from 2005 on with SAS Germany, and now in your current position. And I've ended with him, so we'll start with him. I hand it over for a few minutes for a short introductory presentation by Wolf Lichtenstein.
Yes, thank you very much. I was introduced already, and I'm adding that I'm also part of an international management team in my company, not to make me even more relevant, but just to let you know that I'm traveling quite regularly globally, and I think it's very interesting to get the focus a little bit broader than just look into what is happening in the banking industry concerning the disruptive approach of the fintechs. because disruptive approaches, and that is our experience, are happening, in fact, in every industry, and they have something in common, and I think we can learn something from that. Before that, of course, you need to know, in case you don't know, what the company is I'm working for. So we are a very, very old startup. I have gray hair and work on worth shoes, so that was the idea. We have been founded 76. We have about 14,000 employees. We are, in fact, have subsidiaries in every country of the world, more or less. And two things I think stand out. One is that we are investing more in R&D than any other IT company regularly since we have started. And number two, we are in private hands. And maybe a little bit more, and that is we have always focused on the same thing, and that was analyzing bigger amounts of data, which was in the past, in the banking industry, and still is, mainly risk management, fraud detection, compliance, regulatory stuff. So all the things we have discussed, and I will not repeat that. But obviously, when I look now what is happening now in the banking industry, but also in many others, then we are speaking now about the disruptive changes that are called digital transformation. And here, it is all about changing the focus from companies away from the product to the consumer. And this is happening everywhere. It started with the retailers that have now a competition that is Amazon. And Amazon is, if you look into it, not a retailer. Amazon is a technology company, a logistics company, but not a retailer. So the competition comes from somewhere else. When you look into media companies that have lived from ads, they have now the competition from Google, also not another media company coming from somewhere completely else. If you look now into manufacturing, which is at the moment also undergoing a huge change, the car manufacturers are not very worried about each other. They are worried about who will own the customer relationship due to the fact who will own the platform that sits in the car. Will it be Apple, will it be Google, or will it be themselves, which they obviously prefer. So obviously, disruptive changes are going everywhere, taking everywhere place. Disruptive, from my perspective, means two things. Number one, the difference must be to what it is now, at least 8 to 10 times better from a customer feeling, from a customer experience, from a product quality, from a pricing perspective. And number two, it means that it is something completely else, and that the competition that you have had is not the competition you will have in the future. It will come from corners and from domains you would have never expected that it would come from. And to say the last thing about this competition and alert thing, obviously we have all examples in mind where we have been felt very not worried at all. We know these stupid examples about the horse coach people that said, we are not afraid of the cars, there will never be enough chauffeurs. We know about the worries about the train in terms of 30 kilometers per hour, will a human person not be able to stand? We know in the meantime that this has come not true. So we know that we have, as humans, the tendency to ignore threats when there are weak signals. On the other hand, we might also exaggerate. I remember in the middle of the 90s, in every conference, we were told the internet will destroy all retail business in the next 2 years. It starts now, and it is about not 2 years, but it's about 20 years. So it's no reason to panic. It's no reason to be kind of cool. It's every reason to be alerted. And I think that is what we have to do, to be alerted and to be aware of what's happening. And the least and the stupidest thing from my perspective we can do is just to think it will go away on its own. So I spoke a lot about already these slides. So you have the choice, read my slides or listen to me, and you will see it's different. So it's your decision. And what I wanted to say now in terms of customers, so every disruptive change in the industry I've described before is away from the product. So I was speaking with board members of car manufacturers. They said, in the past, our business was to produce a good car. They know now for the future, this is not relevant anymore. They all produce more or less good cars, and I will not mention any name that we should not mention at the moment. We all produce more or less good cars. So the difference will be the way we have a customer relationship, which is something completely new to car manufacturers. At the moment, most of them don't have a relationship to their customers. They have a retailer in between them, and that is a big problem for them. And more or less, this is now something not only how do we get the relationship, but also what is the relationship about? So what does the customer want from me? And here again, let me jump from one industry to the other. In the media industry, in the moment, and also Google, a lot of companies live from ads. The next trend is now happening. New companies are living from blocking ads. And the next generation is already on the front that will be blocking blockers. So is this a game that makes sense? Of course not. The question is, can we do something that is not annoying? Can we do something which a customer would like? Can we do something which a customer enjoys? What do we want as customers? What do we want as humans? And when we look in what we want emotions, we want to be liked, we want to be appreciated, we want tenderness, we want all this. We don't want it always, we don't want it completely, and we don't want it at the same time, at the same place, always. So how do we find out when do we want what? Where? How? And this is the issue where we have, in fact, a big opportunity. And this big opportunity, at the end of the day, is the data. We have huge amounts of data, and you all heard maybe on one paper or the other already the word zettabyte. I don't know where it is. I think it's somewhere else. A zettabyte, for those who still haven't heard, it's a one with 21 zeros. This is a lot of data. We are about, till the year 2020, to come to more than 40 zettabytes. So we have a lot of data, but what we don't have a lot of usage of this data. And now we are coming back to the banks. Banks have a lot of data, always. They are, in fact, have been from the beginning, theoretically, a data-driven approach, a data-driven industry. But the data has resided in different silos, like in risk management, for example, or in the marketing, and there was no way of bringing these two together. Neither was the department interested, nor the bank. And that is only one little step to bring this together. There's even much more data available that can be used to come back to the question, what do my customers want? Where do they need it? How do they need it? And what is the way they don't feel annoyed when I'm doing it? And theoretically, again, the data is there. And at the end of the day, fintechs are, from our perspective, and most of the banks in the world, by the way, are our customers already. So we are in a little bit of a dilemma. I mean, we have a good relationship with the banks, but obviously we also need to tell them you have a significant issue in changing into this fintech approach, into this fintech challenge, which is not about a technology challenge, but it's a challenge about utilizing data to giving a customer experience that is appreciated. And if you buy a fintech, or if you build a platform for a fintech, or if you try to be a fintech as a bank, is not really mattering. The question is, do you transform into a data-driven organization, and how? And the problem the banks have is the legacy. They have invested billions of euros or dollars into their IT systems, in their infrastructures, in the way they're utilizing data. Now they have big skyscrapers, and what they're doing at the moment, besides doing fraud and risk management, they're modernizing skyscrapers, which is again billions of euros, but the competition is not building a house at all. They are only using data to produce a customer experience that is appreciated. So that is an issue. And the last thing I wanted to say on this is this race cannot be won in the way at the moment it is happening. So the question is not how can a bank become a fintech from my perspective, but the question is how can a bank be innovational in another way, so not to try to copy this, but how can they innovate? How can they use the big amounts of data where they have a quantitative advantage? They have much more historical data, they have much more branches and humans, they have much more theoretical basis of using that to create new ideas, to create new products, to create new services. Otherwise, the only thing is get cheaper and cheaper and cheaper, and margins, we have heard, are already low, so can't be much lower. So at the end of the day, customer experience, customer appreciation based on data is still not happening, is the crucial point in every industry when you want to do the transformation. And at the end of the day, it's not only about being faster, better, because that would only be a question of a race between a rabbit and an eagle. At the end of the day, you can only win the race when you innovate and use what you have. And the last remark from my perspective, because I heard a lot about Germans and how slow they are. I happen to be one too. So I feel a little bit when I go into the world that we often try to be somebody else. And I think it would be much smarter when we use our strengths. We are not the fastest. We are not number one. But when we come, we come. And now I say, all the ones that at the moment are number one, wait and see. I know a lot of companies that have been number one, they are away. So I think for Germany, it's much better to do it the way they do it, very thoroughly, and take your time. But be innovational, use your data, and identify your customer, and give him an experience he appreciates and he's grateful for, and then he will pay you money. Thank you very much.
Thank you. Now, let's try to apply what you say. Okay, we should have the customer view. The customer is reflected somehow in this data environment. So how do we make use of that in providing better ways of payment? And there's, of course, one company that comes to my mind when I think about lots of data. That is Google. Salvatore, Pennino. Thinking about data and thinking about how to use that, how to improve the payment situation, payment system situation. Is that something where you think about at Google?
It's working. Okay, thank you for the question and to be the first one. As you may have read, we have been recently launching Android Pay in the US. So this should be already public, and this should be already be in the giving some kind of ideas where our developments are going to. And I think this has been a significant step. After 4 or 5 years within Google, I've been disappointed about the past approaches. And I think this time we are seeing a dramatic change in the market globally. And after 2 decades in payments, I think that this is going to be the biggest and fastest development that we will see in the future.
So that means we'll get the Android payment system. We'll get it in Germany fast. You know, Apple Pay is coming rather late into Germany, has not yet even announced it. Any indication when we could have it?
Well, I think that the most important thing is not to be the first or to be very fast in this particular area, because the market has to be ready. And so it's all about being able to deliver and to offer the service that is necessary to get the right level of customer adoption. So whenever Germany will be ready, we will be soon here.
Mm-hmm. It brings me to another question still to you. I mean, Android payment is about mobile payment. The question is the market ready for mobile payment? How many % of the customers would go for mobile payment? Any indication from your side? Again, you're sitting on big data streams. If there's someone who knows, must be Google.
Well, I've been able to get some insights about public information about mobile payments, in particular looking towards our big competitor, Apple. And I've seen that customer adoption is a big challenge in mobile payment. As this is not just an approach of a single company or a single industry, you are tapping into a multi-ecosystem. And in order to be successful, you have not only to be able to read the data, but also to offer the service. And this is a service that, moving from online to offline has always been a big challenge. And so I think that it's not just about the data, but also about the infrastructure and the willing of the participants to be there.
I would like to move on actually to Karsten Roesch. You are kind of a representative of the more established systems, and you are coming just up with Pay Direct, which is not yet mobile payment, it is e-payment. How do you see the customer currently and customer attitudes?
First of all, I could tell that I come from the tradition because I'm the only one wearing a tie, which is, okay, I take that. All caused by meetings before and after this panel. That's my explanation. You mentioned Pay Direct, and yes, it's internet payments. I just had a quick look at some of the material I gathered so I can prepare myself for this panel. Mobile payments, to my knowledge, in Germany is 0.02% in 2014. Internet payments are 2.8%. And it's also coming from sort of the job that I do. I regular have discussions around not so much internet and mobile payments, but we discuss what's our strategy on cash. And in Germany, we have this situation that still more than 50% of transactions that happen in the market are cash. And I think, sort of coming back to a more pointy answer to your question, yes, we've launched Pay Direct together. I mean, it's public with savings banks and with other banks, because I think you should be in the market first of all for internet payments, and then we will see what we do with mobile payments, because at the end of the day, the customer will decide where this balance will shift over the next 5, 7, or 10 years from more than 50% using cash to, we can take some guesses at the end of the round. And I think Pay Direct is one idea of how you can actually purchase your goods.
I'd like to move to the other side, to Markus Rupprecht, B2B. We've looked into B2C very much. How's the B2B market developing in terms of customer behavior? What do customers want there?
Maybe I can give a very short example on the previous answer, because I think it's really right that it's a lot about customer behavior. And I still remember the quote from the former CEO of O2, because 5 years ago he said in 5 years credit cards will be gone. And I think he has 2 more months now until he is going to achieve this. And I think this is exactly what you say. It's all about customers. And I have been in a panel yesterday also on the future of payments. And it's interesting because I see, especially in the day yesterday where it was more focused on the banks, the complaint of all the participants on the panel was that nobody really talked about the customers. So I think banks still have these issues that it's very bank or company centric rather than really listen to what the customer says and what the customer wants. Now, if I apply this to B2B, I think the situation is even worse, because I think, corporates have been, you said I was a banker and I was working for Deutsche for 10 years. And the reason why I left Deutsche is because I fundamentally saw that there's a big need in B2B payments, because how can a company like BASF put all the data from a payment run in 140 characters? It just doesn't make sense. And I heard companies complaining for years, and it seems now they've given up, because there are no complaints anymore on payment speed. And yes, we are talking about faster payments. There are no complaints anymore than how limited the characters are, because they all found a way to circumvent this. But really, this innovation that we see in the B2C market now is coming from fintechs, because they know what the end customers need. They are the end customers. I mean, Square was found by a guy who thought there's a problem in buying coffee at Starbucks. And this is where this comes from. But there aren't enough fintechs in the B2B space because they don't know how to tackle the problems. So my old example is everybody screams if Facebook fails for half an hour on Sunday evening. But the same guy walks into the company on Monday morning and doesn't complain that he only can do payments for his company between 9 o'clock and 3 o'clock in the afternoon, 5 days a week.
a bit asymmetric, indeed. Now we have three individual perspectives. When I now come to Bernd Richter, I mean, you are kind of the advisor to many. Maybe you have an overview. How do you see it at Capco?
Maybe I can add or elaborate a little bit on the described cases. There's one, bringing fintech into perspective as well, with, in collaboration with banks. I've been working together with a fintech in, now going away from Germany, but near neighbor to Slovak Republic, to Bratislava, where we've been working with a fintech company that started to create a P2P payment mechanism, almost like here in Germany you would probably think about Kringle. But in difference to what Kringle does here, they would go to the bank with their technology, would integrate directly, and the banking market is not that fragmented in Bratislava, I must say. It's only 4 major banks that basically share the retail market there. So they went to all 4 banks and proposed that they will provide a mobile app which they will directly integrate into the back-end payment system to introduce a SEPA credit transfer on ISO 20 or 22. And basically through the app, which is registered through the website, securely on the bank's e-banking payment system, every consumer that has a bank account can now initiate P2P payments amongst each others across banks in real time. And that proposition is basically free. The banks are paying for that in terms of not by transaction cost, but by a yearly usage fee for using the platform and give that money to the fintech. What happened in Bratislava is that the usage pickup of that platform was tremendous. So almost on every normal working day, more than 100,000 people are using registered accounts, using that on a daily basis, sometimes more than once to initiate payments. Think about, we had the discussion on cash displacement. Now, we use cash today because we don't have any other payment instruments on a P2P basis, other than some here in Germany on providing Kringle through DKB. But they're not publishing any figures in terms of how many users there are. So I would argue that I'm not sure if that's successful. But in this case, in Bratislava, for example, you see that a lot of people use it. It is across ages, so people from really 18, who must be, of course, in terms of holding a bank account, up to people in the 70s. So it's really across the ages, and the kind of thing in the discussion that only the young adopt these type of technologies is completely false, because the majority of transactions are with the from 30 to 45 in the age, so exactly where I am. Not saying something about my age there. So here is a very interesting example of a collaboration model of a small fintech together with a banking market to create an advance and create innovation for that market, for the consumers. And this is advancing, of course, so they're extending their business model where they make money next to the platform lease cost, also to extend that now also on the point of sale. What they also did is that you can now go in Bratislava to any kind of small store and ask, I need 200 euros. I don't want to go to the ATM machine. And they just give you the 200 euros and you do a P2P transaction. So it's also another nice use case.
I mean, it's one of these interesting observations where you see once an attractive solution is in place, people jump on it. And then the market share goes up. I mean, some of you may know EB Research, my institute. We measure, we count, we weight everything that you can measure, count, and weight, especially in the area of payments. And one of the interesting things is, okay, in e-business, you have a market share currently, e-business share is around 10%. But don't take that wrong. If you take out food, which is a very special thing, you already come up to 15%. If you anticipate what happens in the next 3 to 5 years, you go far beyond 20% market share in e-business. These people may pay, and that's where your little figure of only 3% payments comes from, may pay by the end via a direct debit. But in front of the direct debit, there is PayPal. So half of all transactions in the internet are either PayPal or Amazon. And PayPal, I mean, let me be very, very direct. These are the guys who are looking at an ocean liner. They are sitting on top there. They are the captains, and they get the 2%. and the banks are down there shoveling the coal into the steam engine, and they are very happy and say, we are still on board, we are still on board. So don't take it for granted then when things develop like that, when there is kind of this explosion in the e-business, habits get changed, when they are transferred then into the mobile world, and you have given an excellent example of that, that customers would not jump on that. So I would say, let's be prepared at least, and let's watch carefully. So far for the customers. Let's have the second round. Supervision, regulation. What is the view that a Deutsche Bank would have on regulation these days? Is that, and let me maybe be specific. Payment Services Directive 2. Only in payments. Payment Services Directive 2. Access to account, access by third parties, triggering transaction from third parties. Is that more a threat, or is that more an opportunity to tell we are the more secure player here in the game, and it will be even more difficult for others?
Okay, as the only banker, or current banker on the panel, I now come from shoveling coals on the heat of regulation. It develops nicely here. PSD2, I mean, we at Deutsche Bank always look at regulation irrespective of whether it's PSD2, whether it's MiFID II, or whether it's the new EU regulation on current accounts. We look at it as an opportunity because regulation brings change to an existing situation, and that is your chance to do things different than others may do it. And maybe one more comment, the 0.02 and the 2.8%, I don't misunderstand me as saying we are very relaxed, we've got our ATM machines and we are happy because more than 50% of the market is there. That was not what I was saying. I was saying that is currently the proportion, and also we are convinced that we get into the 2025, and we can have guesses later on, territory. So bottom line, regulation, we never look at it as a threat. We always look at it as an opportunity because it enables you to differentiate yourself from others.
Then let's move on directly to Salvatore. Android Pay is coming. Are you going to be a bank? Are you going to be regulated, or how will you handle that?
Well, Android Pay is just a wallet. And so it's not a payment scheme. Like every other virtual wallet, at this point in time, there is no proprietary payment landscape from Android Pay. And so we will not become a bank for Android Pay. That's as far as what I know, but I can disclose at this time.
Okay. Traxpay, how is that there? Are you going to move to a, banking operation?
I don't know, and I also I'm not sure if this is the right way for Google, because I think if I look at all the fintech companies, and I'm not saying Google is a fintech company, I'm sorry. So if I look at all the fintech companies, I think they ride on a wave that regulation is as fast as it used to be in the past. So if you take SEPA as an example, and I'm a little bit bashing on banks now, but it's just the way of business goes. It took 10 years to get an agreement on SEPA, and it took 5 years to implement SEPA. If you look at the example you're going to discuss in the afternoon, if you look at Bitcoin, and I don't want to go in deep discussions there, but after 15 years, Bitcoin does exist now for 6 years, and the volumes are much higher than in the first 12 years of SEPA. So I think what's going to happen that the banks will have to adapt due to the challenges and the customer-centric views of fintechs to the speed of innovation, especially in payments, and I think regulators have to too. So I agree. Google is not going to be regulated now because they are a wallet. I'm not sure if this is sustainable in the future because they take care of money and they move money. And I think if you look at it from a regulatory perspective, this will be regulated. And everybody thought, in the US, and I happened to be at the conversations between all these Bitcoin companies and the Fed 3 years ago, where they said, oh, we are not regulated. Well, now they are regulated in New York, and I think that the regulators will speed up with their decisions and new regulations way faster than they used to be in the past, and I think the landscape will change. So as of today, Traxpay is not a bank. We will see how this is happening in the future. I still think that for most of the fintech company, not for Google, because frankly, Google, whenever they want, they can be a bank. I mean, it takes between 10 and 50 million and you're a bank. For most of the fintech, this is hard to bear. So I think most of the fintechs will cooperate with banks, which is hopefully for both sides benefits. But you cannot answer the question as of today. As of today, you can, but I think it's not a very sustainable answer for the future.
One correction from my side. Google, as far as Android Pay is concerned, is not taking money and not giving money away. It's just a wallet which is relying on the tokenization platform, which is run by Visa, MasterCard, and Amex.
Okay, so it would be credit card based, and tokenization at the front end. I'm curious, looking at SAS, can you tell us about projects that you have done for fintechs, especially in the area regulation coming, data to be collected, data to be reported to the supervisors?
First of all, we are involved in these projects. With fintechs, at the moment, the volumes of data are overseeable. So what we are doing here would now be from our technology or analytical perspective not really something we can be proud of. What I think and what I wanted to bring into this discussion as a completely different view, obviously, because I'm not an expert on the way pay systems will function in the future. But I think what we see here is there is a front end, another front end coming between the customer and, in this case, the bank. And what we see, and we have seen that with Apple, we have seen that with Facebook, the front end is owning the customer relationship. And you have had this example of the ship and the coal and blah, blah, blah. And it's completely right, don't get me wrong. And I think that is something which you can see as a threat when you're the one who is shoveling the coal, but you can see that there's a huge opportunity when you're owning the relationship. So for me, from my perspective, the big thing about these payment systems are not the payment systems, because I don't see that there will be made much money. The experts can correct me. But when you own the customer relationship, and when you can create benefits, and when you can create experiences, and when it's just fun to work with it, and when it's sexy, then you suddenly extend your business model to wherever. Look what Google started and what they are now. And they will for sure change again. And Facebook is changing again. Why? Because they are owning customer relationships. Amazon was starting with selling books. And now Amazon is just a platform that owns customer relationships with product marketing, with individual pricing, with individual offerings. And by the way, from our analytical perspective, this is just the beginning. Partly Amazon is, by the way, working for our software, if you allow me to say. And I think this is something that is so much more relevant than the question, what is the paying system? The paying system must be trustful, must be work, but there are huge opportunities. And the question is, where are you? Are you the lunch, or are you the one who is having the lunch?
And before we address this and ask for the role of the various participants, the future role that could come up, may I ask into the audience, are there questions at this point in time regarding customer behavior, regarding, yeah, there's one. Microphone.
I heard great discussion, by the way. Thank you. I heard a lot of discussion about customer engagement, but none of you mentioned social networks.
What social networks?
Social networks.
Well, Facebook is one.
Yeah, but their involvement and their development in the world of payments and maybe later commerce and whatever.
So let's ask a concrete question. The pay button in Facebook, which is there.
Well, it's a start, but I'm guessing their long-term vision is much wider. So.
Is that for you, and I look at all of you, is that for you something that is the start of a major development, or do you say Facebook remains Facebook and that's another story?
My personal opinion, although I don't work for Facebook, therefore I cannot comment on that as I'm not from Facebook, but my observation would be that Facebook, for example, in the Facebook Messenger, where they integrated P2P payment capabilities, do that more for the purpose driven by creating more usage of people using the Messenger in terms of adding functionality to the Messenger so they stay relevant in the Messenger market. That's my firm belief. I don't think that currently, at least what I'm observing, that they want to become a major player like other smaller fintechs potentially try to be a setting on top of banks, like for example TransferWise, which is a free rider model that use bank infrastructure. The Cole example, exactly the same. I don't think currently that they are planning this, but could they? Probably. And we heard customer relationships that they own. They have over 1.3 billion accounts these days, actively used, so not dormant accounts, real active accounts. They could do that easily, but that's, I believe, not their core business at this moment in time. Could that change? Who knows? But currently, I think adding additional functionality that is near in terms of near payments, what the P2P functionality is purely to stay relevant for this functionality of their core business, I believe.
Mm-hmm. Yeah, please.
So there seems to be some kind of a gold rush towards payments. Yeah. So it's not just so many small companies all over the world, but also, as you mentioned, it's Google, it's Facebook, and now it's also Starbucks. It's even Little Caesar is developing a payment platform. Yeah. So if you have to mention exactly one reason, yeah, I don't know whether it's other than the obvious reasons. Is there like one main thing that all these companies are rushing like crazy towards payment?
What's the answer?
I probably have a start. In my view, it's not the payment per se that is interesting. It's the behavior that sits behind the payment. What do you do? I don't know. I heard that 5, 6, 7 years ago from UK colleagues. You went to Tesco, and after the 6th time you went to Tesco, you got out of a sudden ads for dog food because someone found out that you actually spent more money than average on dog food. So I think my point is, this is not about payments. This is not about getting into a commodity business and do it cheaper and get the scale play. That's not the rationale. It's the behavior and it's the data that sits behind what customers do. And back to the earlier point, it's all around the client, not the payment transaction.
Mm-hmm. By the way, if I may comment on the colleague beforehand, again, we weight and measure everything in EV. And one of the observations is when you look into how payments are used in the social networks, that people are reluctant to do it. The even more interesting thing is the more you are digital, the more you are a native, the more you are also aware that there are security issues more around some things and less around other things. More around payments, very much more so around payments. And so exactly these people, the highly digital people, tend to shy away from the very modern ways of payment in terms of just do a push button with PayPal, etc. Sorry, not with PayPal, with Facebook. Yeah. PayPal is another story because people know there's a lot of security behind it. There are complete AI mechanisms behind that are checked in real time. So people consider it rather secure.
But I think, I think we have a misunderstanding of what payments are. Because every example we managed is a gateway to payments. There hasn't been, and I used to do this example for years now, and just now it doesn't work anymore, but I'll comment on that in a second. The last innovation in payment was the credit card. Every payment we do is cash, card, direct debit, or check. Mm-hmm. So PayPal uses these functionalities. There isn't anything else. And obviously, credit transfer. So there is no innovation in payments. There is lots of innovation in the front end of payments. PayPal uses this. TransferWise uses this, but there's no innovation in payments. And right now, this example is not true anymore because we have Bitcoin, which is definitely some kind of innovation and blockchain in payments, which is going to be seen what it's about. But all these fintechs, and me included, it's not about payments. It's about the interface. It's about value-added services with payments. There is no invention in payments. Having said that, there is now, and we'll see what's going to happen.
And also let's look into the instant payment schemes that may come up from the supervisors.
Yeah, but this is also more, it's credit transfer.
Credit transfer. So far, it's real-time credit transfer.
It exists with Target, so the schemes are there, everything is in place. It's nothing, sorry, it's nothing new.
As you see, we could discuss for quite a while. We found out yes, there are changes at the front end. Maybe less than some people hope, but more than some people fear. So what does it mean for the market structure as a whole, for the market setup in future? And I think this will be our last round, looking at the clock below us there. I would ask each of you to anticipate what is the market structure in 2022. So that's 7 years from here. How will the markets, the supplier markets, develop there? Who wants to start?
On payments.
On payments. On payments.
I can start. In terms of my observation and discussions I've been having with many banks, as well as fintechs, I think, plus looking at regulation, which is also enabling and driving change, as you rightly alluded to. I think what we will see clearly is the move towards instant payments. The ability to really have the value transfer in almost real time. We've seen it with faster payments in the UK. We've seen it in Brazil, where it is actually not only near time, it's really real time. I've done a project there last year, which was really amazing to see how they operate. We see the strive also with Canada 2020, where they're also looking at moving into a real-time space. We see now in the US with the Fed moving toward that. We see even individual European countries in the Nordics that really want to be even faster. We see the EBA announcing on Cybos this year that they're implementing instant payment in their payments engine. So this is something that we'll clearly see. How will this be implemented in terms of by all the banks? Another SEPA project in terms of the size and the cost? Hopefully not. I think this time there will be other means of use, intelligent use of technology. We heard blockchain as a potential example, a relief provider for getting there. I think we will see very different types of payment networks potentially evolving. I believe very much in the topic of interoperability, since we all spend a lot of brain and money on standardizing, especially in the ISO 20 or 22 space, and CGI with common global implementation. I believe there is clearly a strive for interoperability between those different networks and systems globally, on a global scale, and potentially even Bitcoin or some type of cryptocurrency as a transfer mechanism between the FX, in between the currencies. But I also believe that potentially this will also be just a stepping stone for, at some moment in time, to move towards a smart payments network that is just acting as one virtual global payments network and take more functions that currently reside within a bank into that network, where corporates can connect directly in terms of B2B, where consumers can connect directly, as well as banks, and as course regulation to even have a better view of how money transfer is being actually happening in real time.
That was already a rather holistic perspective, I would say. Let's continue.
I'm trying to be a little bit faster. I think, I was, when I started to be a banker, I was faced with this quote from our friend from Microsoft, Bill Gates, who said, I think 25 years ago now, banking is essential, banks are not. I think we do see that this is not true, because banks will always play a role. I, up to this point, haven't come across any fintech who doesn't need a bank. So I think they definitely will play a role. I think what will happen in the next 10 years, that the innovation on how to utilize payments and how to work with payments and how this whole scheme fits together will be way faster. I think the innovation pressure on banks will be much higher, but they have the big advantage that there are many other people out here, running around who have great ideas that can be adapted by banks. So I think it's a very positive view, especially for the consumer. And I think the old industry will struggle a little bit and how fast they will and can adapt. Also, same is true, by the way, for regulation. But I think this will all happen in the next 10 years.
I'll make it even briefer. I'll go back to my earlier percentages. I would say in 2020, we'll see less cash, less plastic. I'm not saying less credit card. I'm saying less plastic. And more use of smartphones for payments.
Okay. And that will be Android smartphones or Apple smartphones?
We'll see. But I would like just to add to this one. I think that the payment future will be in the hand of who is owning the relationship to the customers. The customers will be the end customers as well as the merchants. I think the relationship will be owned by the one who is able to match the needs of these two target groups in terms of reducing the friction that we have today in payment. We see payment just from a point of view how it's working between B2B, but not between B2C. And also, I think the future of payments will lie, and the relationship will be owned by the one who is able to really focus on mobile, because future of payments will be mobile payments.
I don't try to be even briefer. No, seriously. I think that even mobile payment might be replaced to something else, whatever it is. I see the issue from a technology perspective. For me, it's still a piece where I think there can be from a way of using stuff. I see a lot of improvement, and I don't mean a watch, and I don't mean glasses. I think we will see here other things that are much more convenient. I see another issue. I see that we have currencies at the moment. On the one hand, it's money, and we have spoken about the systems, but we have not spoken about the currency of trust, which becomes, of course, more and more relevant. And the question is how to create trust. And we see that maybe people will be willing to pay a little bit more if they know their data will not be used, or we might see something else in terms of I'm willing to be transparent if I get a lot of relevance and significance, and that might be a cultural change to what we define today as intimacy or privacy. And in fact, I have to say, I don't know, but what I see is that these are huge paradigm shifts in terms of what our way of speaking each other, defining intimacy and societal cohesion. It will be revolutionary, and the question is if we will enjoy it. Let's see.
So more change on the front end, maybe with the help of fintechs, less change on the back end with the schemes, but maybe a rearrangement of the players who may merge, who may split. We'll see, but we don't know it all. Thank you for listening.